Welcome to another exciting episode of The Trading Bell. This week on the program, we shall be speaking to veteran businessman and who was recently appointed the chairman of the Nairobi Securities Exchange, that is Mr. Kiprono Kittony. He'll be talking to us about what we should be expecting even as he takes over office and the road ahead for the Nairobi Securities Exchange. But before we get into the conversation, let's take a look at his profile. Mr. Kittony holds a Bachelor of Commerce degree and a Bachelor of Laws degree from the University of Nairobi and a Global Executive MBA from the United States International University. Kittony was appointed chairman of the NSE board on the July 13, 2020 and as a board director of the NSE on May 30, 2018. He is the immediate former national chairman of the Kenya National Chamber of Commerce and Industry, the premier business membership organization in Kenya. He is an established entrepreneur and business leader, having served in several capacities, including being the immediate past chairman of the Media Owners Association and AAR Insurance Limited. During his 7-year tenure at the KNCCI, he was widely credited with revitalizing the organization through a series of transformative initiatives that placed the chamber at the forefront in terms of shaping national trade and general economic policy. He serves as the chair of the Credit Info CRB Kenya Limited, MTech Limited, and Radio Africa Group, which he co-founded in 2000. He also sits on the Advisory Council of the International Fund for Health in Africa, an Amsterdam-based private equity fund, and is one of 2 representatives from Africa in the Global Council of the World Chambers Federation. Thank you so much, Mr. Kiprono Kittony, for making time for us. Such a pleasure to have you on the Trading Bell.
Thank you very much, Abi, and very happy to be with you again.
Amazing. Well, congratulations on your recent appointment to the board as the chair. I know you've served previously in the board, and perhaps for the investor community, what will be top on your list?
Thank you very much, Abi, and again, it's always a pleasure to be on KTN. It's a pleasure to be on this show, and it's also the first time that I'm on national TV speaking about the new role that I have as a chair of the Nairobi Securities Exchange.
Yes.
But let me first correct you. I was not appointed. I was elected unanimously by members of the board.
Thank you for that.
There seems to be a actually, many people I meet were of the opinion that this was a government appointment, but in reality, it is actually an election by the board, and the NSE is a 100% private sector entity and governed by random articles of association. So I come in at a time when the market is facing significant challenges. The global economy is faced by huge and daunting challenges arising from the coronavirus pandemic.
Sure.
And Kenya, this Nairobi Securities Exchange has been going through a bear run for a couple of years, and several companies have been impacted. We've seen many companies no longer trading their shares, like Deacons, Marshalls, and several others. The Kenya Airways that recently suspended its trading of shares. And certainly there's a lot to be done. Our job is cut out. The NSE has just completed its 2014-2020 strategic plan.
Yes.
And I come into the leadership at a time that we are beginning the implementation of the 2020 to 2025 strategic plan. So it's an exciting time. We are at a significantly low level, and I'm confident that the road ahead will be one that will deliver success to the myriad of stakeholders in the capital markets.
All right, interesting. And as you rightly put it, you're coming in at a bumpy time for not only Kenya, but globally, all markets are sort of experiencing some significant turbulence.
Yes.
And for you, Mr. Kiprono, when you see activity in the Kenya economy, we are seeing some rebounding following the easing of restriction of movement, the opening of international flights. What does this mean for the economy, and of course, from now, your vantage point as the chair of the BAOS? What lies ahead in the horizon?
You see, definitely we are going to see a whole new world order commercially, not just in Kenya, but across the globe. There will be certain industries that will be impacted not into the long run. There will be many small and medium-sized enterprises that will fade away completely. There will be certain large industrial players like airlines, those in the tour and travel industry, that will also be hugely impacted. There'll be a huge loss of jobs. I think, going by the latest statistics, almost 48% of the global workforce have either lost their jobs or have taken significant pay cuts. So that also impacts on consumer spending.
Yeah.
But in terms of the capital markets, there are a few things that we plan to do. And I'll just share with you a few of the thoughts that we have. Number one amongst this, of course, is to look at additional listings. We think there's a good case to be made for more listings. We want to work with the government of Kenya. We would like to work with the privatization program of government to release more equity into the market.
Yeah.
And in that, I'm talking about organizations like Kengen, of which the government released 35% through an IPO in 2007. We would like to request for further drawdown of equity release. Companies like Safaricom. We believe that there's a huge, there's a pedigree of good companies in the government that could still be listed and provide good value and excitement in the market for shareholders. Organizations like Kenya Pipeline, perhaps Kenya Seed Company, and many others that we would like to talk to government about.
Okay.
In the private sector also, there are very many significant players who could benefit from listing. And in this, I'm talking about family-owned enterprises, and we have a list of them that we would like to approach. I wouldn't want to let the cat out of the bag. Okay. But we shall be certainly knocking on the doors of many of these large commercial enterprises and owners, and we'd like to talk to them. We'd also like to revisit the list of incentives that have been given to corporates to list. Working with the Capital Markets Authority, who are the regulator, we would like to see if the incentives that were given 20 years ago are still relevant and enticing enough for investors to list their companies on the market. Yeah. So we are working very closely with the Capital Markets Authority in that regard. The other thing that I would certainly want to do is to increase local participation in the capital markets in Kenya. One time I think one of the leading captains of industry in Kenya said Kenyans are very peculiar. And I think I agree with him because Kenyans think that investing is driving to Kitengela and buying a plot. Sure. And I think right now, if we look at the fluidity of the market, there is actually a very big challenge with land ownership because land prices have tanked. I would rather call it a correction because if you look at it, Kenyan land value has been hugely overpriced and it's been actually a barrier to entry for many international investors. If you compare land prices, for example, in the city of Nairobi to even other larger cities like Cairo and Johannesburg, it doesn't add up. So I think the correction of prices also creates a good justification for people to start to look at the stock exchange as a viable option for them to place their nest egg. All right. So we are looking at how we can enhance local participation. At the moment, about 70% of all trading that takes place is foreign. And I wish that in the 3 years, the term that I have now, we shall be able to level that up to 50-50.
All right. Yes. Talking about tilting the scale to favor local investors, yes. We've also seen local investors looking at the exchange as an elitist market where it is only for a chosen few. How do you break the shackles around this?
I couldn't agree with you more. I mean, there is a misconception about the exchange. There is a conception in the public that there is a lot of insider trading, that perhaps we haven't done enough about corporate governance, because some companies, even on the exchange itself, have imploded whilst they are in the exchange. So maybe working with the Capital Markets Authority, working with other agencies in the country, I think there's a lot more that can be done to enhance the culture of good corporate governance in our country. That is based on the fact that there is empirical evidence that long-term shareholder return is directly related to the ethos of a company and its corporate governance culture. So we would definitely want to do more on that. But then for sure, we need to change the conception that this is an elitist product. And, Kenya is a very unique country in many respects. Yeah. About 30% of our GDP is transacted on M-Pesa. So I would like that in the 3 to 6 years that I have to chair this board, together with the very competent management team that we have, look at ways that we can enable direct access to trading through digital platforms. I mean, I'd like to see get to a time when it'll be possible for you to trade in shares on your phone, sitting right here, buying and selling a share in Safaricom and buying and selling a share in KCB, and etc. So we can create more liquidity in the market.
Okay.
Yeah.
And Chair, I'm very excited when I hear you talking about increasing the listings. For the many years, we've seen different chairs take over this position. Listing hasn't been really a big agenda. It seems like listing is going to be big in the near future. And when we look at the current number of listed companies, we're talking about around 52
Yes.
listed companies. When you juxtapose this with what we see in Johannesburg Stock Exchange or the Nigeria Securities Exchange, it's a far cry for Kenya. When, for instance, in the JSC, we're talking about a listing of over 80 companies. And
Yeah.
Within your time in office, what are the timelines for us to see actually this being converted into actual listings?
Obviously, I have a 3-year tenure as the chair,
Yeah.
and I would like to achieve as much as possible within this period of time. And we are hitting the ground running. I mean, we are working 24 hours. We are working around the clock to ensure that these things do happen. But more than anything else, we would need the cooperation of the government of Kenya,
Yeah.
particularly with respect to the privatization program. And, we would like to achieve this as fast as possible. And I think if we can get 2 major listings on an annual basis, and perhaps 2 or 3 minor listings, it would be we'll be going a long way insofar as achieving our objective.
Okay.
But then again, let me also say that there is also a concentration risk concern. I mean, if we look at the 58 or so companies that are traded on our market,
Yeah.
The activity is centered around 6 to 7 of the top counters.
Sure.
So we'd like to see also more trading in the rest of the counters. So we need to see the agricultural sector, the manufacturing sector play a much more active role. I mean, today, I know I wouldn't want to mention the names of the companies, but then there's just a few companies that are dominating almost 80 to 90%
Correct.
of trading activity in the market.
Correct.
But regarding the issue of conception that you'd asked me earlier on, I think the fourth estate is a major stakeholder in this regard. And as you know, I'm an investor in the media myself, but I feel that strongly that there isn't enough business education. We don't have enough seasoned business journalists in this country. Of course, I give you credit yourself, Abby, because you've been at the forefront in articulating issues that affect business. But the reality is that a lot of the stories that we see in the mainstream media, and sadly enough, even by business journals itself, that are supposed to be, the ones,
setting the pace,
articulating the most researched positions. Sadly, a lot of them are lacking in credible and accurate content. Most of the time, you see information about the NSE. It is more often than not dwelling on the negative rather than the positive. So we would like to see more positive, more analytical, journalistic output.
All right.
We'd like to see you as the fourth estate come to the table to help us to inform the public that investing in securities, in marketable securities, in bonds, and in shares is a good option.
All right.
Yes.
I can clearly agree with you on this, and I do hope my colleagues are going to be taking up this challenge. We are seeing also a lot of activity in the bond market.
Yes.
And we did see NSE and the government partnering when they did Emma Kiba,
Yes.
which was oversubscribed. But in actual sense, we are not seeing sufficient products coming in. And when we drill down and say, are there enough products in the market that the NSE has tailored for the average Kenyan investor who say has 10,000 shillings, 5,000 bob, that they need to come on board? Where do you see opportunities around this?
You see, the bond market is a very interesting market and actually should be at the center or the core of the activities of the markets. But then again, we have seen investors on occasion lose funds to certain entities that do not perhaps take a long-term view. I mean, there's been a few mistakes done in the last few years, and certainly those mistakes have impacted on the appetite of investors, especially retail investors, and even institutional investors. And by way of remedying this, I think we need to tighten the rules by which these bonds are issued. We need to ensure that the products that are being put on the market are credible products and with sufficient guarantees of return to its shareholders. And the two things that I think in the short term that we can do with regard to bonds is to reduce the issuance cost of the bonds, and that's something that we would like to work on, because we need companies to be able to come to the market and raise capital fairly quickly, without a very high cost attached to it. And then the second thing is also reducing the time that you can come to market. I think the amount of bureaucracy before they come to market is fairly lengthy, and I would like to see that we can reduce this so that it gives people a much quicker turnaround.
All right.
Yeah, but then for sure, the bond market is something that needs to be relooked at, and it's something that can certainly play a much bigger role in the market activity.
All right. And as we wrap it up, Chairman, when you sit back and look at how Kenya and, of course, the larger East Africa has performed during this pandemic, we've definitely seen economies being battered significantly. And is there hope at the end of it? Are we likely to see our economy still bouncing back? We've seen the aviation sector has been significantly hit. We are seeing talk of airlines to bounce back in 4 years' time. And as you know, aviation is a critical cog when it comes to economic activity, from tourism to air travel, and it's a whole ecosystem on its own. I just want to get your overview in terms of where do we go next? What should we prioritize on?
That's a very interesting and broad question as well. But let me start by saying that, like I said in the beginning, the global economy has been impacted by COVID-19. That is inevitable and it is invariable. So Kenya is no exception. I mean, we need to go back to the drawing board insofar as what are the big ticket items that we will need to address in the post-COVID economic ecosystem. And I think for me, this now more than ever before is a time for us to look at our national competitiveness as a country. I spoke about this severally when I was the president of the National Chamber of Commerce, and I would like to use this platform as a chair of the NSC now to really ask our leadership to address the matter of our national competitiveness, our trading situation with our neighboring countries. We need to critically look at the fact our market leadership in the East and Central African region. I'm sure you're aware of the fact that our trade balance today with our neighbors, especially Uganda and Tanzania, is in favor of our neighbors.
Sure.
So, and that's in the last 20 years, for example, Uganda has gone from a 20-to-1 trade balance in our favor to a trade surplus for them.
Sure.
So we need to ask ourselves, when did the rain start beating us? Insofar as us being a financial hub, we need to ask ourselves the critical questions. Do we have the infrastructure? Do we have the systems in place? Are we sustaining our leadership position? And there are many conversations that we need to have now. And regarding businesses that will fall by the wayside, I think it's inevitable. I mean, the COVID crisis will definitely see many industries suffer long-term consequences, and some even go into complete oblivion. But again, you see, it depends how one looks at this, what prism one looks at this. Is the cup half full or is the cup half empty? I mean, insofar as there will be businesses that will fall by the wayside, many new other business opportunities open up.
Oh, yes.
I mean, in logistics, in online delivery, in e-marketing. I mean, there's a whole realm of new opportunity. In one of the businesses that I do, which is Safaricom dealership, we've seen the M-Pesa, for example, business surge with the social distancing and the encouragement of payment in non-cash forms. So I think one needs to look at the whole economy with a new set of lenses to find where the opportunities are. Because if one dwells too much in things that are no longer going to work, then I think, of course, you will face the challenge of not being able to make one's ends meet. Like we spoke earlier before when the interview started, our own industry, the media. I mean, the media, for example, is hugely affected by technology, by the advent of new platforms.
That's true.
So the media also has to reinvent itself and move into an ultra low-cost model. And in all this activity, for me, the most important thing in the seat that I occupy today is that we must, really educate the public of the importance of investing in stocks. We must educate the public that this is not a quick in and out transaction. Many retail investors were, pulled out of the market after the Safaricom IPO because they didn't make the quick buck that they anticipated.
Sure.
But we would like to encourage them to take this thing with a view of a long-term
Position.
investment. We'd also want to work much closer with collective investment pools. The other thing I'd also want to talk about on the bonds is that we should also find a way to give credit ratings to the bonds, so that people know the credit rating of the bonds. There are many credit rating institutions that are operating here. We'd also like to encourage bond issuers to create a sinking fund where they put aside some of the money that they get out of the bond to guarantee the payment through insurance and other products that will safeguard the investment of those who show confidence in those bonds.
All right.
Yes.
And Chair, it would be unfair for me to end this interview without picking your mind around being a Pan-Africanist. Yes. And of course, I know you're a big farmer on the other side of things. I'm just keen to hear from you. When you look at where the NSE stands, we have our regional counterparts.
Yes.
And we also have companies that would like to cross-list in Kenya. There are Kenyan companies that would like to cross-list in Uganda or Tanzania or even in Rwanda. I've not heard you talk much about this. Is it also something that will be featuring in your in-tray?
You see, first of all, you're very right about my being a Pan-Africanist. I was one of the business leaders who celebrated the most when the AFCFTA was signed in Kigali 2 or 3 years ago. I greatly believe that the only way Africa can be competitive and move out of being, on the periphery of global economy is by us uniting and harnessing more economies of scale, by us also reducing our geographical barriers that are between us, and working towards actually creating one large seamless market across Africa that allows for the free movement of goods and services. And you asked two questions here. One is about agriculture, and two is about how we can work closer as a continent together. On agriculture, I think for me, there is a huge opportunity in our country, and I'm a farmer, and I greatly believe in the huge potential that we have in agriculture. The mistakes that we have made in Kenya are well known, but unfortunately, we are taking a very long time to correct these mistakes. Agriculture is not space science. It's not that complicated. Yeah. And I think for me, we haven't embraced scientific methodology of farming. We haven't collapsed the water tower into our agricultural process, water being a key enabler to agricultural activity. Sure. And thirdly, we don't even have the extension services that we used to have in post-independence Kenyan agriculture. When you look at the breadbasket districts like Trans Nzoia, where I come from, the farmer today enjoys much less support from government than they did in post-independence Kenya. And that's very unfortunate, because you see, if you look at Kenya today, we are very, very well poised to become a major food surplus country and an exporter, not just to other African countries, but to the rest of the world. But we are not. In fact, if you look at many of the value chains in agriculture, we are moving in the opposite direction. That's true. And in terms of working with other African countries to boost and develop stronger capital markets, I think the time is now. Using the framework of the African Continental Free Trade Area, we need to start to build economies of scale across our countries. I see NSE, for example, not being the Nairobi Securities Exchange. I see it being the regional, the major capital market player in the East and Central Africa region. All right. I see the Johannesburg Bourse, for example, playing the same role in the Southern African region within the SADC countries. And in North Africa, Lagos doing, West Africa. In North Africa, I see Cairo being the center for capital market activity. And in West Africa, of course, Lagos. One of our short-term objectives, of course, is to foster a stronger relationship with these exchanges, to be able to attract more cross listings, to be able to also enhance liquidity, and work with them to increase the number of cross listings in these countries. This is definitely top of the priorities that I have as a chair. Yes.
Awesome.
Yes.
Very exciting and fascinating and intriguing, always to just tap from the fountain of wisdom, our newly elected chair of the Nairobi Securities Exchange, that is Mr. Kiprono Kittony, just giving an optimistic view of what will be characterizing his time in office. And of course, we shall definitely be keeping an eye and just to see how things pan out in the coming days. Well, that's it for this week's episode of the Trading Bell. Very imbuing sentiments from the chairman of the Nairobi Securities Exchange, Mr. Kiprono Kittony, even as he takes over the mantle of leadership at the bows. Well, that's all the time we had for here on the show. Remember to engage with us on our social media platforms appearing at the bottom end of your screen, and keep safe. See you next time.